Okay, hi everyone. Thank you so much for joining. So my name is Jessica. I'm the co-founder of Araka. To give you a bit of background, I've been working in the Web3 space for the past 5 years, especially focusing on financial inclusion in emerging markets. Prior to that, I was in the not-for-profit sector, so nothing related to tech at all. But don't get me wrong, I've been definitely loving my Web3 journey, not necessarily for like the cool event like the one today or for the cool swag that we have, but really because I do believe this technology has the potential to solve some of the toughest problems the world faces. And so today I would like to share with you some insight. Oh, by the way, how do I? Sorry. Thank you. Sorry?
No, you don't need to connect. It's fine.
And I need to, okay, cool, we'll see. Okay, yeah, so today I would like to share some insights with you about, what I've learned within the past 5 years building financial services and especially Web3 application to solve the need of real people and especially in emerging markets. But before we get started, I would like to look back at the state of Web3 today. So if I've been in Brussels for the past 5 days, same as you, not counting the days. And I've attended a lot of talks, events, presentations, and I think I've never heard the word adoption that many times in my life. And so everyone talk about how we can create products that drive adoption, or how we like to say it in Web3, how to onboard the next billion of users, right? And myself included. I have the word adoption here, so I'm not kidding anybody. But however, I think there is a common mistake that we make in the space, actually, is we are talking about adoption really behind closed door. If you look, at the audience, we're not that many today, or at the number, most of the people actually in Web3, builder, developer, are based in US and Europe. And to me, that's kind of a problem. And I will explain why after. But that's a problem because it feels like the community is kind of small, tech-centered, and focused in developed country. And why is that a problem? Is because we see most of the crypto adoption actually happening in emerging markets. And this is no surprise because the needs between developed country and emerging markets are totally different. So why there is high adoption in emerging markets is because it doesn't come from a trend or trying a new technology, it really comes from a need. If you take example like Nigeria or other country, there is still a lack of traditional financial system, very high inflation. And so taking the case of Nigeria, which is top 2 in terms of crypto adoption, we have seen through the year an inflation that is absolutely insane. So people had to kind of jump on using global stablecoin because they didn't have choice. If you look at remittances, this is the same case. There is a lot of people sending money across border, so from UK to Kenya and so on. And so the tools that they've been using for a decade was Western Union. It was the most used to send money across border, and without knowing most probably that Western Union charge you probably half of the amount that you're sending. So really adoption comes really from a needs and something that is lacking in those markets. However, what we see happening is that people are still using Western Union. Why are people still using Western Union when we have a technology that allows you to transfer funds in an instant with little to no fees? And I think the problem is because there is such a big difference between those building and those leveraging the solution. And so that's, to me, one of the biggest roadblock to adoption. Again, I attended a lot of talk. We talked a lot about infrastructure, about technological complexity, and I really struggle to understand how talking about tech complexity can drive adoption. We never talk about real user needs. What do these people need? What do they want? And so if you look, for example, just an example that I like sharing is about Gmail. None of us know about Gmail infrastructure. We don't really care. We just want to send the email. We want to receive the email that has been sent in a second. We don't really care about the tech stack behind. That's how they convince us to use it, right? And so to me, this should be the same. When talking about, about adoption, we should think about a real user, and we should think in their context. Taking the case of Nigeria, again, which is very high in terms of crypto adoption, there is some solutions that have been built within the ecosystem that are totally irrelevant, because even if they have shown a lot of innovation in their market, there is so many people, even in urban areas, that rely on 2G network. Most of the people use an Android. Same with the design. If we don't want to talk about infrastructure, I saw so many applications with like beautiful design. You can slide and do so many things. If you look at Kenya, where I do most of my user research, most of people have the first Android, they have broken screen, they put the luminosity down because to save some of their battery, and they increase the text size. Sorry. So when you look at this, it's like, okay, it destroyed totally the UX UI we tried to build for those people. And so to me, if we want to keep talking about adoption, we really need to shift our mindset and take a user-centered approach. And so that's what we did and sorry, it's a bit messy, this slide, but that's what we did at Araka. So we actually built a community credit protocol, and everything that we are building from like feature, product, material share with people on the ground come from real user insights. So we built a community credit protocol that connects RWA investor in the tokenized private market space to micro entrepreneur in emerging markets in need of capital to grow their businesses. And here we leverage the technology, not because that was something cool, but because it really solved a problem that no other technology was able to solve before. And this problem is the global credit gap. So you might know there is still 2.5 billion people that are financially excluded, and those people do not have access to credit or even like banking system. And so there is a lot of fintech that have come into play in the past few years that have tried to, provide credit to those borrowers, but they could serve only such a small portion of the people, because it was just too hard to provide credit to people that either don't have credit history, financial transaction, or anything. It's just too hard to understand who is a good from a bad borrower when you don't have a history. And so what happened is there is a lot of people that came together to form what we call community finance, saving cycle, and so on, to provide financial services to each other. That's something that we see a lot in Africa, Latin America, but even in Europe. And so those people come together, pull their saving on a weekly basis, and then get credit from each other. So here we have the case of Daisy, which is a real person, one of our users. Daisy is 32. She lives in Nairobi, Kenya. She has run businesses over 2 years, just a convenience store in her community. She has been part of this community finance for many years, so she has saved with those people, she has taken credit, she has repaid. She has a very good reputation within her community because of that, because people know that she is a good person, she has financial stability, and so on. The problem with Daisy is because all her transactions happen in cash within her community, there is no way for traditional financial institution or even fintech to understand, is Daisy a good or a bad borrower? And so in what we try to do with Araka is, what if we could actually leverage Daisy's reputation within our community to give her access to credit? What if community insight could tell us if Daisy is credit worthy or not? And so let me explain how that might work. So within our protocol, we try to do something very simple. So Daisy's friend and neighbor are actually able to vouch for Daisy's Daisy's reputation, so allowing her to improve her reputation and get access to a loan. If she repays back her loan, her reputation improves, and so does the one that vouched for her. So we really rely on the joint liability of the group. If you're acting well, I'm rewarded, and so on. So Daisy voucher can actually stake part of their saving as well. Again, we're in a saving cycle to collateralize her loan. If Daisy's repay her loan, they will earn a portion of the interest, and so further incentivizing good behavior in terms of lending and borrowing. And so here is the infrastructure. That's what I've always asked within conferences and when I have to talk about Araka. So what's the infrastructure behind? How do you actually do that? So we have built a protocol that is on Celo. Not sure how familiar you are with Celo, but they've been very big in emerging markets. It's mobile first, and they have been focusing on payment. We have a settlement layer that is literally the flow of funds between the RWA space and micro entrepreneur on the ground. Here the innovation is we are leveraging local stablecoin. Very important, not only for the borrower, but for lender side as well, because in that case, lenders are able to follow from the moment they send the funds till the person receives the credit and once they repay. For the borrower, it's totally different case scenario as well. Leveraging local stablecoin totally abstract the technology of the user. People currently don't know they are dealing with blockchain technology or crypto. And that's something that we really want to push forward. Then the reputation layer, which is literally a crucial piece of stack within our infrastructure that enable us to better target and ensure repayment. And then application layer that is just a simple dApp that enable people to request credit. But this is what I want to actually show you. It's not the infrastructure that is interesting here. This is what people see. People don't care about infrastructure again, and especially not users. So when talking about adoption, this is what they need to see, and this is what they need to understand. What can I get from this? What this is going to give me? And is it answering a need or not? And so at Araka, we have always taken this type of insight, what the value added that the product can give, not the infrastructure. And so, yeah, if I have, after working at Araka, launching this type of product and focus on financial services in emerging markets for the past 5 years, I think we kind of found like the secret sauce that I call for mass adoption, at least in those markets. Won't talk about Europe or anything. It's we need to build applications that users love and actually feel loved by it. And that comes down to 4 principles, according to me, again, happy to hear other thoughts. But first is understand your user deeply. I see too many projects, applications, product being launched without any user in mind or without having done the user research before. How do you want to drive adoption if you don't have a user archetype, if you are not sure who you're targeting? You cannot build for everyone, so just focus on one user. Design with empathy. Again, this is very, very important that people feel value when they use your application. They cannot just feel that you have launched this to provide credit and whatever, cultural practice was not respected. Focus on accessibility and usability. I think this is one of the most important aspects. We touched base a bit on that at the beginning of the presentation, but again, not everybody has the latest iPhone, not everybody has a 5G network. This is extremely important to understand that if we want to drive adoption. And then build trust. This is very proper to emerging markets. I wouldn't talk about Europe or US. This is something that I'm not familiar with. But it's very important to build a sense of trust and transparency within community when you're launching a product, because they will be the driver in adoption. And so, yeah, that's it for today. If I have one hope from this presentation is that I was able to help anybody in building application for emerging market, or at least get some interest in targeting those countries. Thank you.
Jessica, I had a question.
Yes.
Obviously, you are relying on people that, if I'm providing a loan, I don't know who, I'm not part of the community, and so there is a potential that they might collude or to say no, Jessica, she is the best, we trust her, but they are also in agreement and sort of fleece me for my money. And I was thinking, because how we do this in crypto, no one needs to trust anyone because you have slashing. So I was thinking if that's how would it work, in your case, so that I cannot, like, there's no incentive.
Yeah, like to call it, that's a very good question. That's one of the biggest, limiting factor to scale at the moment. So we have different phase and different approach. So right now, the approach that we've taken is partnering with already existing organizations that have already verified those community. There is thousands of organizations working with this community. So we know that they are existing, they trust each other, they're in close proximity. Down the line, we are currently building, this credit model, reputation model that rely on different aspects, which should avoid collusion as the system grows, because if you collude, the other one as well. So that's what we're working on, but yes, that's one of the main blocker, main risk, I would say, of the program.
Awesome. Thank you.
Can you explain more how does the reputation layer verify the credibility of the borrower? So like the borrower is not going to have any on-chain activity, there's not going to be any information about the borrower, but how are you going to break the borrower to give them more loans?
Yeah, that's a good question. So again, we're targeting a community group that are already providing finances. So we are bringing all the saving data on chain. So we have those data to create like a base credit score. So this is based on how frequently you saved, how many times you missed like a payment to your group, and so on. So that gives you a base credit score. And then the reputation layer is based on who votes for you, the weight of this vouching. So that means, for example, if you vote for me, but you missed one payment, did not repay, my reputation goes down as well. And so this is a set of data that comes together to form like the base credit score.
And that's from the community funds itself?
Yes, community level. Yeah, everything.
But they can only vouch if they...
Part of the community, yes. So these communities are usually run by a community leader. How that works, this community leader add the people, and so is the second layer of verification as well in the attestation system.
Then how are you guys managing defaults in this case?
Yes, very good question. So right now we working through like savings, as I was mentioning. We have like those communities who have savings, so we have created this pool where they can draw down credit, but they need to lock their saving to be able to access it. It's less than what they are getting in terms of capital, but in case of default, we are taking this to recover the loss. As a second layer, we worked with a financial institution like foundation that provided a guarantee fund, so people who default could be, the funds could be there. In case of the individual, if the person actually defaults, what we are going to do is to try to get back the funds through like a different mean in terms of notification and so on. And then is the guarantor who recover the cost. We take the joint liability of the group, so everyone is responsible for repaying the loan.
And then I had one last question in terms of the people who are actually vouching for the other person. Is there any downside other than like a social risk? Do they have to stake if someone is borrowing $100, that everyone who's sort of vouching for that person has to stake $2, and if for some reason that person goes into default or misses more than 6 payments, that they lose their stake as well?
Yes, we really rely on this. We didn't reinvent the wheel, right? This is already how it works within the community traditionally. And so if everyone is taking part of their amount for your friend to get access to a loan, the money is taken away if they default,
Got it. Here.
I have a question. You just mentioned that this is already a model that is deployed in communities. You're scaling this, you're digitalizing this model, making it better, right? Is this exclusive to African communities, or do you guys anticipate any other ways, expansion paths?
Yeah, so currently we launch in Kenya. So we're focusing on Kenya main market. We also launching in Ghana in October through the Grameen Foundation. I'm expecting this model to be able to be replicated in Europe. For example, we know a lot of people are doing community finance already. But I wouldn't say in the shorter term, because through the presentation I explained how you need to have real insight into user behavior, cultural, and so on. So this is a model that is scalable, but will take time as we grow.
Thank you, Jessica.
Thank you.